Hi, it's Adam Hewson. I'm coming to you as always from the digital studios of Market Club. And the market we're going to be looking at today is one of our favorite markets. That's gold. This is spot gold. This is the symbol for it on Market Club. So it's spot gold. It means gold for immediate delivery. As you probably are aware, when you have futures contracts, there's carry-in and warehouse charges that are built into the price. So that if prices stay the same as they are now, then that premium, that cost of carry, so to speak, would evaporate. So, but let's take a look at gold, because we've talked about it before. We've had this big sort of energy field we've talked about. We recently said it broke out over these levels here, which it did. I should draw that a little bit better for you. But it has broken out to the upside, and it does look as though the longer term trend for this market is to go higher. And if we put a long-term indicator in, which is our monthly one, you can see that right here at 929.50, that's when we got long based on a long-term indicator. So what's happening now is really kind of interesting, and I want to spend some time and explain it and share this with you, because I think you'll get a much better appreciation of market cycles and how they work, particularly in the gold market. So let's take a look at that, and I'll set it up and we'll come right back. Okay, we're back, and as you can see on the screen, we've got a number of dates and some lines and everything else. It kind of looks a little bit confusing, but I want to make this very clear. We're looking at cyclic action, which means from here up to here, down to here, and so forth. These are all rhythms that you can choose, and what we're looking at here is the lows October 23rd of last year. That occurred, and it was approximately 84 days until we hit the next low. So from here, this low here, October 23rd, till January 14th, 84 days. I'm talking total calendar days. Now the next low occurred in April 17th. So let's just put the 17th in here. And that was a total of 93 days. And the next low from April to July was approximately 86 days. Very similar to this 84 days right here back in the October-January cycle, and so forth. Now, if we're correct and we project this forward, the average of those days is approximately 87.66 days. So it should work out to be somewhere in the first week in October. We're going to see this market bottom out and start to move higher. So I think we're going to see action potentially sort of moving sideways, even lower, losing some of the participants, kicking some people out. But after October 1st, after the first week in October, we're looking at possibly the first will be the earliest. I'll write this down. The first will be the earliest cyclic low. The average should be the 7th. That's the medium of all the combined prices, combined days, I should say, divided by 3. So the 7th of October. And lastly, the longest day would be the 13th of October. So this is what I'm proposing we do. We watch this market very carefully and see what happens right after the 1st of October. Now, October is a notoriously difficult month for the stock market, and we could see this market start to pick up as the stock market goes down. A couple of other things, too. It looks as though we possibly are peaking out in here as this market's beginning to turn down, and it looks like it wants to go lower. Now, having said all that, how does that leave us on the top side of the market? Well, the amazing thing is from February 22nd to June 02 was approximately 100 days. The next time frame, June 2nd to September 16th, which is right here, is approximately 101 days. Now, don't you find that quite remarkable, the fact that this is so cyclic, so rhythmic, and we're so close on these numbers? So if we're looking here, we're going to be looking for an average potentially of 87 days, 87.44 if we want to get really, really precise. And that takes us into the 7th of October right here. That's the average here. The earliest would be here, the 1st, and the latest will be the 13th of October for a low. Now this is what I'm going to be doing. I'm going to be waiting for this market to come back down because I want to be a buyer. I think the long-term trend in gold is higher, and I want to be long this market. So this is what we want to look at. I'm going to take everything off the screen. So take a little picture of this, write down the dates, whatever you want to do, but remember these dates. It's going to be very, very important in the future. So if we take everything off the screen. Okay, so let's look at the last and final. What's going to happen to gold towards the end of the year? Well, if we're right, and this pattern continues when we make the lows, go higher, make the lows, go higher, we should see a low, as we said, in the first week or two in October. So if we make the lows, then we're going to see the market go higher. So gold should, okay, so gold should make a high on or around December 25th. So it could be towards the end of December, early January, but that's the time window that we should see this market go higher. But as always, we want to look at our trade triangles, because even the best analysis, and I consider this to be very, very good analysis of this market, can go wrong. You have to have a game plan to get out if that market decides to do something completely contrary to what you think it's going to do. So we look at the October period, early October, to be a buyer based on our triangles, and we use our weekly for trend and our daily for timing. And that's what we're going to do. But this gives you an idea to be psychologically prepared, because it's been very frustrating in this market for a lot of traders. Be psychologically prepared to take a position in this time zone if and when we get the correct signals from the trade triangles. So hey, this is Adam Hewison. Thanks for taking the time to listen to this rather long video, but I think it's going to be well worth your time to look at it, and if we're right, you'll be very happy by the end of the year with some of the resolution we see coming to this market. So Adam Hewison, good luck trading. Thanks for stopping by, and every success in the future.